Imagine a world where the cost of importing semiconductors into the United States could skyrocket by 100%. This is the reality President Donald Trump has proposed, but there's a catch. Companies that manufacture in the U.S. or have pledged to do so will be exempt from these tariffs. This move is part of Trump's broader strategy to revitalize American manufacturing, and it comes with some significant implications for both domestic and international companies. On August 6, Trump announced that the U.S. would impose a 100% tariff on imported semiconductors, but with a significant exemption for companies that are already manufacturing in the U.S. or have committed to future investments. This announcement was made alongside news that Apple would be investing an additional $100 billion in the U.S. market. For companies like Apple, which have already pledged to build in the U.S., Trump assured that there would be no tariff charges. However, he warned that companies attempting to back out of their pledges would face severe consequences, including retroactive tariffs. But here's where it gets controversial. Trump's remarks, while impactful, were not a formal tariff announcement. This leaves much room for interpretation and uncertainty about how different companies and countries will be affected. The proposed 100% tariff rate for chips comes just ahead of new U.S. levies of 10% to 50% on a wide range of goods from dozens of trading partners, scheduled to take effect on Thursday. The rates on semiconductors and other key tech goods have been under scrutiny as part of a U.S. national security probe, with results expected by mid-August. The reactions to Trump's announcement were swift and varied. South Korea's top trade envoy quickly clarified that major chipmakers Samsung Electronics and SK Hynix would not be subject to the 100% tariffs, thanks to a favorable trade deal between Washington and Seoul. On the other hand, the president of the Philippine semiconductor industry, Dan Lachica, warned that such tariffs would be devastating for his country. In Malaysia, Trade Minister Tengku Zafrul Aziz expressed concern that the tariffs could make Malaysian products less competitive in the U.S. market. Taiwanese companies, known for their significant role in the semiconductor industry, have been proactive in building U.S. plants or buying U.S. firms with local factories. Taiwanese chip contract manufacturer TSMC, for example, is expected to be relatively unscathed due to its existing U.S. factories. This means key customers like NVIDIA, which makes cutting-edge AI graphics processing units, are unlikely to face increased tariff costs for U.S.-made chips. NVIDIA itself plans to invest hundreds of billions of dollars in the U.S. over the next few years. Large, cash-rich companies that can afford to build in America will be the ones to benefit the most. It's survival of the biggest, said Brian Jacobson, chief economist at investment advisory firm Annex Wealth Management. This sentiment is echoed by the $52.7 billion semiconductor manufacturing and research subsidy program created by Congress in 2022, which has already convinced all 5 leading-edge semiconductor firms to locate chip factories in the U.S. The U.S. produced about 12% of semiconductor chips globally last year, down from 40% in 1990. Martin Chorzempa, senior fellow at the Peterson Institute for International Economics, noted that chips made by China's SMIC or Huawei are unlikely to be exempt from these tariffs. However, he also pointed out that chips from these companies entering the U.S. market are mostly incorporated into devices assembled in China. If these tariffs were applied without a component tariff, it might not make much difference, he said. The EU has agreed to a single 15% tariff rate for the vast majority of its exports, including cars, chips, and pharmaceuticals. Japan has also secured an agreement that it will not receive a worse tariff rate than other countries on chips. Shares in Asian chipmakers with big U.S. investment plans climbed on Thursday, with TSMC and Samsung seeing significant gains. Silicon wafer producer Global Wafers, which has a plant in Texas, also saw a substantial increase in its stock value. And this is the part most people miss. The impact of these tariffs goes beyond just the semiconductor industry. It affects global supply chains, trade relations, and the competitive landscape of the tech industry. As the U.S. continues to push for domestic manufacturing, It raises questions about the future of international trade and the role of global companies in the American market. So, what do you think? Will these tariffs ultimately benefit the U.S. economy, or will they lead to unintended consequences for both domestic and international companies? Share your thoughts in the comments below.